Thursday, August the 5th. We've yesterday's news today, or the headline is wrong, I'm not sure which. But those are the bloopers that happen on the last day before you go on holidays. Let's welcome, as always, Thursday morning, Dr. Carole Nakhle, CEO of Crystol Energy, sitting in Germany for not much longer, I believe, because there will be a return to London any moment. Carole, we see the markets open in Asia this morning. Little change, up and down, 5 or plus cents, but ultimately the trend this week has been clearly downward on concerns of the rising variant, Delta variant, and also uncertain outlook for China. How do you see things this morning, and particularly with the horizon through the month of August?
Good morning, Sean. Good morning, everyone. Well, I tell you how things feel today. They feel that they are simply going in the wrong direction compared to only a few months ago when everybody was talking about tight market, which I found rather premature because we did not take into consideration how much spare capacity OPEC Plus was sitting on and is still sitting on. And also the discussions about pent-up demand. So really we're talking about the demand, oil demand, economic growth, soaring back with vengeance by the summer. But when you look around, you see that, hold on a minute, this is not quite an illustration of what we were discussing only a few months ago. And actually, oil prices are heading up towards their 80s, as many predicted, or even towards the 3 digits, towards maybe by the end of the year they might, we don't know. But they seem to have gone in the wrong direction. And actually, I'm not going to portray a gloomy picture here, because even though we are where we are today, around 70 for Brent, and WTI was below 70 yesterday, we have to remember that they have still come a long way compared to last year, and they are still trading at high levels, marginally higher than what we saw at the beginning of the pandemic. So that is on the positive side. But in terms of where we're going next, how I see things proceeding for the rest of August and maybe well into September, well, look, as long as there is uncertainty when it comes to the virus, and here I talked about the things going in the wrong direction, all eyes were on the largest economies in the world, and that includes the US, China, the UK, and of course the EU. And if I exclude the EU, you can see in the other places where the vaccination have gone at a very rapid rate, you can see that things are not looking as bright as what we expected a while ago. So even Israel, which vaccinated most of its people and was proud of doing so, I read that they are asking again employers to make people work from home, and they might introduce lockdowns. So as long as we have this prevailing uncertainty, it is wise to expect greater volatility. So it's not gloom and doom in the market. I don't think we're going back to a bad scenario, but definitely we're going to brace ourselves for continued volatility as long as we have uncertainty with respect to the virus and its implications on oil demand and travel restrictions.
Well, it is worth noting that overnight, the US recorded 100,000 infections yesterday in the country, the highest for 6 months. Let's welcome Ed Bell, Senior Director, Market Economics. Ed, I think you captured it very well in your note earlier this week with the headline, Asian economies at risk from slow vaccine rollout. Have they got this horribly wrong, being somewhat negligent on vaccines and hyper obsessed with lockdowns?
Well, wrong or right, I think that's, a question maybe more of a public health epidemiology point of view. But in terms of the economic impact, surely the fact that I think when we if you're constantly reading kind of financial press, Bloomberg, Reuters, what have you, you're really looking at things often through the prism of what's happening in the Eurozone or the UK and the United States. And we can often describe the coronavirus pandemic in kind of a past tense way, when really it is still raging very much in a lot of these key economies. So if you look at vaccine rates in places like the Philippines or Indonesia, you're talking sub 20% of the population being completely vaccinated. So there's still a long way to go. And that's increasingly coming out in the numbers, where we're seeing that governments who have been kind of loath to reimpose very stringent lockdowns like we had last year are kind of resorting to them, because that's the only way they can get ahead of the virus at a time when they don't have the vaccines rolled out right now. So I think we do face a risk that a lot of the kind of positive growth that we had expected that would be compressed in the second half of the year is really not going to materialize. Is going to be prolonged, stretching into 2022, if we do even get vaccines rolled out on scale in some of these key emerging markets. The one positive that we're seeing is actually the data from India is starting to turn around. But there too, it's just a question of, well, we had such a disastrous second quarter in India that you're inevitably going to have a bounce back once those restrictions are being removed. So while the numbers do look good in terms of the economic prints that have been coming out, we're also seeing an uptick in COVID cases in India as well, and states needing to impose localized lockdowns.
Well, interestingly, overnight, Ed, we saw the UK not only elevate the UAE, which is obviously a relief to the hundreds of thousands of British expats here, that they've moved the UAE from the red to the amber list. They also moved India onto the amber list, so you can travel to the UK from India if you're vaccinated without quarantine issues. Andy Laven, COO of Sahara Energy Resources. Andy, the data points this week, surprisingly, in terms of the EIA US inventories, climbing. Hard to explain that, but nonetheless, gasoline stocks declining quite significantly at 5 million barrels. Your thoughts on what the inventory levels tell us at the moment about this market?
So hello everybody. So I think the inventory data from the US basically just points to what most of us would consider is the new way of doing things. Do you want to get on a bus or a train or an airplane with a whole bunch of other people, or get in your car with the people you live with and go from A to B? So I think to a certain extent we're seeing in some of the data the change in the way people are transporting themselves around the countries. I think Carole was absolutely spot on in a lot of what she said. I think we've
some parts not so, but a lot of what she said was spot on.
It's more about how fast do we really believe it's going to come back, and I think we all want it to come back faster than in reality it is. So what you see in the data is what people can do. People can get in a car and drive across state boundaries in the US, but can they actually go overseas on holiday? That's where the big change is going to be.
Carole, despite, I mean, we've had these few pieces, obviously the US is dealing with this Delta variant in their own way. And to a great extent, whether it's in the past tense or the present, a lot about the COVID is how you react to it ultimately, right? You coexist with it, you lock down, or the China model, a much more severe version of that. Even though infection rates in the US are 100,000, they kind of coexist with it with some minor adjustments. In China and Asia, a few dozen infections and everything gets locked down. Ultimately, how do they get out of that trajectory? And will we have to see the major agencies, EIA, OPEC, even the World Bank, start to look at their forecast for the second half of 21 and adjust downward?
You know, one thing we have to accept at some point, and we are already seeing that in the UK, in the US in particular, and even here in Europe, that at some point we have to learn how to live with the virus. Maybe some countries feel that they are ahead of the game in that respect. But in the US, I would say in particular, there they are facing now, after they rolled out the vaccination at rapid rate, but they have faced a wall of resistance towards vaccination. This is where they are standing today. And I think you see also in the UK, they are trying to use a carrot and stick approach to encourage more people to get vaccinated. But I would say the appetite for people to get vaccinated, especially the younger people, might be higher in countries in the UK than in the US. But of course, the US population is much larger. Now, of course, so we'll have to learn how to live with this virus because it's not going to go away anytime, any soon. However, what is needed, and that is actually a positive sign that has developed recently, is that the developed economies, the rich countries, support the poorer countries, the emerging economies, to roll out vaccination. And there seem to be that have reached an agreement on doing that, allocating a couple of hundreds of billions of dollars to support the rollout of vaccination in the poorer countries. However, in the UK, for example, the government is talking about giving a booster in the autumn for its population above 50 years old to give them greater protection against the Delta variant. But the head of the WTO called for a moratorium on any booster shots given before other countries, let's say in the developing economies, have vaccinated 10%, at least 10% of their population. So people are realizing that for the developed economies, the one that feels safer than elsewhere, to be left alone, they have to support the developing economies. Otherwise, this uneven development that we've been talking about in all the shows that we've participated in with Gulf Intelligence, this uneven growth is going to become more uneven, and disparities are going to become bigger. It doesn't mean that one country can develop irrespective of what's happening elsewhere, because this is a global economy. You want to look at it as one big ball. So you need everybody to be at the same speed in an integrated world in order to have this virus under control. Otherwise, you will continue to have this kind of uneven reaction that you mentioned, Sean. But hopefully, again, I want to finish today on a high note, positive note ahead of our summer break, hopefully, that we are moving in the right direction, but it's going to take a little bit longer. I mean, it's a massive shock to the system. It's not going to disappear overnight, even though we would love to see it ending. It's going to be with us for a while, and with structural problems that can be lingering for many years to come.
Perhaps we shouldn't, or whoever makes these decisions, that change the name of the origin of the variants from the geography to some neutral thing called Delta, because it's useful to know when it's the Indian variant from a public consumption point of view, that you're aware that this has come from a faraway place, and if that faraway place doesn't get vaccinated, we're going to still be living with it. But nobody knows where the land of Delta is, and I think that might be, from a communications point of view, a slight error. Ed, meanwhile in China, there's a few things going on at the same time. Obviously, they've got this COVID issue, the resurgence, half of the provinces in the country, but also they have been trying for some time now to control or to suppress the rising price of commodities. They are amongst the largest importers of metals. Half of the world's traded metals end up in China. A third of agricultural products, 20% of oil products end up in China. And they're trying to suppress the price by releasing strategic reserves in all of these commodities. Your thoughts, Ed, on whether that can be successful, and can it impact the global marketplace?
Yeah, I think we're already starting to see some feed through of that when we look at some of the PMI numbers coming out of China, and that the input prices that producers, particularly manufacturing, are having to endure, they're still elevated. They are coming down a little bit. So there is a bit of an impact from the moves that the authorities have taken, such as you outlined, to release more and more material into the market. I think what we're really expecting is that China's growth is probably well past the peak level of its kind of recovery. So we've gone through various phases, I think, by economies where you had China recover very strongly across the second half of 2020 into Q1 this year. We'll probably be fading that growth over the remainder of 2021. The US is kind of midway through that process as well. And it's really up to authorities now how they want to sustain growth going forward. China has really been kind of, I think at this point, tinkering around the edges in terms of financial or monetary and fiscal policy. It hasn't really brought out any kind of full throttle stimulus measures, but we'll have to watch very closely if there is a real spillover from the kind of lockdowns that have been taken so far. They're really soon being targeting kind of places where people would be congregating socially, museums or tourist attractions. I think there's a big beer festival, for instance, in China that has been canceled in response to the rise in coronavirus infections. But we're really not hitting some of the bigger economically vital provinces just yet. So if we had that switched forward, or infections spreading in those kind of places, then I think you'd probably see even bigger steps from the Chinese authorities to boost and support growth going forward, and try to clamp down or try and quash down on those input price feed-throughs. It could potentially be a bit of a break for the rest of the world if the higher input costs are not being spread out across the rest of the economy.
Andy, we had Saudi Aramco release its OSPs for September yesterday. For the second month in a row, they've raised prices into Asia. Seems a rather odd choice at this particular moment. Your thoughts on their decision making?
So I think their view is that we are going to see a continued growth. And to a certain extent, I mean, I don't know their thought process, but my sense would be is they're testing the sensitivity to prices going up. The challenge is whether prices can actually go up. I think that we may be getting a little bit distracted by COVID, because I think most of the countries kind of know how to react. So I don't think we're going to see countries having things get out of hand, other than maybe some of the particular states in the US. So we should be seeing a relatively continuous but slow growth in the future. The challenge comes in terms of what Carole was talking about. How much of the spare capacity is brought on? Does Iran come back in 4Q? All of those things, in my view, have a much, much bearish impact on the market than actually COVID does. And they're a lot more uncertain in terms of what they're going to do. So my guess is that they're just testing the market to see what the reaction to higher prices are, because they may be forced into cutting production in 4Q if the Iranians come back, if demand starts picking up. They may need to support prices.
Carole, just when you thought things in Lebanon couldn't get any worse, on the first anniversary of the tragic explosion a year ago, we're seeing missiles go across the border between Israel and Lebanon in the last 24 hours, including, I believe, this morning. It feels a bit like, as many times in the past, Lebanon is a proxy environment that's been dragged into the wider scenario that we saw starting a few days ago with the attack on the tanker in the Gulf of Oman, which puts Israel and Iran sort of facing off. Your thoughts on where this sort of holistic problem goes? It does seem to be impacting the oil markets, at least to a certain extent, putting a floor under this bearish sentiment that you started your comments with.
Yeah, when you look at what's happening in Lebanon, I mean, it's very, very sad, but I wouldn't look at it in isolation from what's happening elsewhere. As you rightly pointed out, Sean, at the end, we know, Hezbollah and Israel is like talking about Iran and effectively actually Iran versus Israel. And Iran has been trying various tactics recently, especially under the new presidency, because they are trying to convey a message of power to the rest of the world. Maybe they think this is their way of negotiating better terms of the nuclear deal if they want to stick to it. But I'm not quite sure they are on the right footing here. But they're definitely trying to convey a message that we are, much stronger than the previous administration, and we're not going to take simply orders from other countries, particularly from the US. So it is their effort to try to destabilize maybe a little bit the region, but I don't think it's in their favor. It's mainly sending a message across when it comes to the negotiations that they are not here the weaker partner, and that will help also their image in the country. But of course, there are other distraction messages in the country, in the Lebanon, for example, to diffuse the pressure that is growing on the Hezbollah-backed government, especially in because of the 4th of August, a year after the explosion at the port of Beirut. How would that impact oil markets? You see, ironically, I was thinking earlier as I was listening to Andy and Ed, and earlier when we're looking at the news headline, today it seems to be the demand is demand focused, quite rightly so, because a few months ago we're focusing a lot on the supply side. It's an oversupplied market in my opinion, but the demand, which is this what we are today, has been a demand shock. The demand is back in the spotlight. The Iranian story is more a supply story. There seems to be a fatigue. At some point we got excited about the potential of the return of Iranian oil to the market, but guess what? It has been returning gradually because the Biden administration, even though it's taking a tough stance in the negotiations of the nuclear deal, it is definitely not as forceful as the Trump administration in terms of limiting the exports from Iran. So the market is not terribly reacting, to the potential return of the Iranian supply or what that means, if there is deal or no deal. And second, in terms of geopolitical premium, you don't feel that in a market which is well supplied and the demand, there are lots of uncertainty around the demand. So whatever Iran is trying to make, I don't think it's trying to make an impact on oil markets, but mainly impacting the negotiations of the nuclear deal. That said, I read recently, I think it was mentioned also in the news, headline that you shared with us, Sean, this morning, that Iranian president, if I'm not mistaken, praised OPEC for reinstating stability in oil markets. So they are also using carrot and stick here in a sense that they are conveying their commitment to being an active member within OPEC.
Well, it was an interesting comment that a Russian diplomat made out of Vienna, a senior Russian diplomat who's part of the leading team on the nuclear talks, sort of was praising the new president and calling on Iran to be responsible OPEC members when they come back into the market, i.e. indicating that there was still momentum, perhaps, the new nuclear agreement, despite the noise in the Gulf. Ed, quickly, I see in your report this week, the Emirates NBD report on the PMI numbers out of the Gulf, fairly positive for the UAE, 2-year high in July, but Saudi Arabia slipping. How do you see the sort of fiscal health and outlook for the Gulf economies with this resurgent oil price still in the 70s, much more than maybe most had expected at the beginning of the year?
Yeah, just a quick point on where we are with the domestic economies. As you say, the PMI is still, the UAE PMI is actually 2-year high for July, actually doing quite well. Saudi dipping a bit, but really what we're seeing is most of that's being driven by domestic growth. So the domestic economies look like they have recovered quite a lot of the shock that we had last year, and they're doing pretty well. Obviously, UAE in the run up to Expo, so quite a bit of activity there. The export side of both economies still lagging a little bit. New export orders not doing as hot. Another positive for the UAE that we're really trying to watch out for, see if we get some feed through, is that employment and wages are really starting to turn around now. So that would be really good benefit on a sustained basis. Now, in terms of the fiscal position for the GCC economies, we think they're actually looking pretty decent this year, and our projection for the UAE is that it's probably going to be posting a small budget surplus in 2021 with oil prices. Our projection is that they're going to average around $70 a barrel for the remainder of 2021, so a little bit under where the market has been of late, although basically on target with where we are at the moment. And that allows the UAE on our own projections to have a balanced budget. Saudi, Kuwait, some of the other economies a little bit, probably less so, smaller deficits, but still very much an improvement in terms of what we've seen. Now, what we're getting from the improvement in oil prices and why we're not necessarily, we see the oil prices have gone up, but we're not necessarily seeing them as beneficial for the local economies, is that income is not passing through in terms of higher spending. So we're really not seeing any new capital expenditure plans across these governments. You know, government wages pretty stagnant across much of the region. There has been some move in terms of trying to limit the impact of higher fuel costs in Saudi Arabia to absorb that for consumers, but we're not really seeing governments really being loose with their fiscal expenditure, even though oil prices have come in much stronger. So really, we want to see that come through in a bigger way as sort of a fiscal fire hose in terms of stimulus, which we really haven't seen across the GCC. Since the pandemic has happened, most of the stimulatory measures have been indirect things, sort of cutting taxes or cutting fees for setting up businesses, those kind of things, making it easier to operate rather than actually injecting money into the economy.
Right. Well, let's go to the survey question before we ask this panelists to give us their outlook for the rest of August while we're off at the beach. China imports roughly half of all key metals, a third of all shipped crops, and nearly 20% of global oil shipments. Will their interventions to lower commodity prices succeed? We've seen fairly increasingly aggressive engagement by the Chinese government, particularly in the release of strategic reserves, not only on oil, but on metals as well. And they do have very large stockpiles. So your thoughts on that? Can this intervention be successful to calm or lower down oil prices? And let's get the views of the room as to where we're going forward. I would also point out that the chat room is very active this morning, and amongst the comments there, you might want to have a look at China's traffic thins in some cities, congestion in Beijing down 30% week on week. I suppose all of that adds up to a certain extent on oil supply. Andy, your thoughts looking forward? Obviously, the month of August is what it is. We're going to be taking a break ourselves, as will many others, hopefully. What can we sort of be watching out for from the distance, you think, over the coming month? What will the world look like when we come back at the end of August?
So I think the world is improving, and it's going to continue to improve as the governments get a handle on exactly how they need to react to kind of changes in infection rates and stuff. I think the real key is what Carole talked about and what the World Health Organization talked about is how do you get vaccines out to the developing world in a way that means they're not a melting pot for new infections further down the line. If we can crack that, then actually that's going to be very beneficial for the global economy in the long run.
Ed, your thoughts similarly, again, outlook through the month of August. What will you be watching? What do you think could change the paradigm a bit? Of course, this is the month in which OPEC Plus raises production again by another 400,000 barrels per day per month.
Yeah, one thing that I'm looking for, I guess, for the next month, and it's alluded to in the sorry, I keep raising the head, the daily brief that you've outlined, I really want to see higher U.S. interest rates. I mean, I think it's astonishing the fact that we've had interest rates in the U.S. on the 10-year go down to 112 during this week at a time when you have inflation at over 5%. You have several Fed leadership officials talking about the need to pull back on stimulus, to potentially raise interest rates maybe at end of 2022, early into 2023. So the fact that we are still trending so much lower in yields, I think is a sign to us that not all is well, at least as far as financial markets go. So we need to see some kind of turnaround in the messaging from the Federal Reserve about their outlook for growth, their outlook for the need to maintain stimulus at a time when the US economy, yes, it's past its peak level of recovery, but all in all, it's probably able to stand on its own 2 feet.
And the consequences of not doing so?
I think that we end up with you keep injecting all this cash into the market and you can continue to fuel volatility. So the risk of explosions on the upside or downside, not just in interest rate as an asset class, but in equities and commodities and currencies too, is that much more prone.
Let's get the result of the survey and give Carole the last word this morning. Oh, there's another 50-50. Will their interventions to lower commodity prices succeed? I always love it when there's a 50-50 because it sort of gives us something to chew over and that there is very differing views on. Carole, your thoughts through the month of August, where do you think the world is going vis-a-vis commodity markets, energy markets, and the things that impact it?
Yeah, I wouldn't expect a major changes from where we are today in terms of, not in terms of levels, but in terms of variations and volatility. So expect August to continue to see this kind of volatility, ups and downs, as long as we have this kind of different diverging messages that we get. Ed alluded to the central bank, the Federal Reserves in the US, what their chairman has been saying, comforting the market, but what the market wants to see that the Fed is doing. And also elsewhere with this kind of different speed, countries going at different speeds with their opening the economy, other introducing restrictions. But if I look at from a selfish point of view, in the UK at least, I have the feeling that in August we're going to see greater activity in the summer as a whole. But this actually can be worrying when you look at the months ahead, because the government's approach is that if you were to open up, diffuse a bit of the tensions that has accumulated because of the lockdowns and the restrictions, you have the great time to do it in the summer. But this doesn't mean they are going to stick to it. On the contrary, scientists are already warning of a difficult autumn and winter ahead. So relatively speaking, I see things relaxing more in the summer. We all deserve it. But I also see uncertainty and volatility continuing as long as we have this kind of dichotomy and uneven growth. And the answer survey 50-50 is a perfect illustration of how we are divided about our outlook when it comes to very simple things such as, commodity prices and whether metals or oil. And on this note, I wish you all a happy break and happy summer holidays.
Thank you, Carole. I will also be watching, I think for the more immediate sense, of course, is how this Iran-Israel face-off plays out. It's still obviously unresolved and looking like it's lingering. and where does COVID infections go in China and their reaction to that, two sort of imminent issues that are bubbling along rather than long-term trends. They're immediate issues that could be very, give significant direction to the market over the coming weeks. So maybe one to watch from a distance. Thank you, Carole. Thank you, Andy. Thank you, Ed, for your time and contributions this morning. And I'll just finish up with making sure and reminding everybody to book your bus ticket, your train ticket, or your airline ticket to get to Fujairah on October 4th and 5th, where we are going to be having our first live forum but alongside this ongoing pandemic. But nonetheless, we are going ahead in the first week of October alongside the opening of the Expo 2020, which is now 2021. But nonetheless, we hope to see you all there. So just putting that in your calendar, look up the flights if you have to fly, perfectly safe, everybody's vaccinated, all that kind of stuff. So thank you. All the best. Have a good few weeks off, and we'll catch up with you at the end of the month. All the best. Thank you very much.